when they asked me to do that interview that I didn't know what was coming next. But the next topic, which I would say is the antithesis of the last one, is DeFi Horizons. Itai will be moderating. He will introduce the rest of the panel. But now we're going to talk about DeFi and not regulation, so you guys get a break from that topic. So give it up for the next panel.
All right. Good afternoon, ladies and gentlemen. Thank you for joining us. Day 2 of Paris Blockchain Week. We have a pretty all-star team here, so I'm going to cut to the chase, and we're just going to hit the ground running. I'd love if every person could take a minute to introduce themselves briefly and how they found themselves talking about digital assets in the Louvre.
I start? So hi everyone, so my name is Victor Busson. I'm the CMO of Taurus. So what do? We are a fintech that provide digital asset infrastructure, so custody, tokenization, and blockchain nodes and indexing, mostly to banks, so any type of banks. That's activity number 1. We have a second activity. We operate, so Taurus is FINMA regulated, so the Swiss financial market regulator. And we operate what we call an OTF, an organized trading facility, which is a marketplace to trade tokenized securities. Well,
thank you.
Hello, thanks Paris Blockchain Week for inviting me today. I'm Coti de Monteverde. I'm leading the Crypto and Blockchain Center of Excellence at Banco Santander. For those that don't know, Santander is one of the largest banks of the Eurozone with a strong presence also in LATAM. And my role is basically being the Chief Technology Officer for blockchain technology. I've been working in this space since 2016. In the bank since 2008, I was in the innovation area, and we started looking at this technology, understanding it. So we set up the blockchain lab that now it's obviously something bigger.
My name is Guido Bühler. I'm representing today Zonda Crypto, which is the biggest exchange, regulated exchange in Central and Eastern Europe. It has more than 1 million users, almost 1.5 since the last bull run, and is licensed in Estonia, which is already MiCA compliant. How do I get into crypto? I'm the co-founder of the first crypto bank, which is SEBA, today Omina Group.
Pass in the microphone, thank you.
Hi, I'm Dominic. I'm founder and chief scientist of the Definity Foundation. We're the main contributor of technology to the Internet Computer Network. And I got into crypto back in 2013, switched full-time to researching sort of crypto theory and the things that make blockchain networks run, sort of end of 2013. And I actually first came across some of the kind of antecedents to crypto in sort of 1999. I was using a library called Crypto++ by Wei Dai, and it described something called B-money, but I had no idea what it meant. And
that's old.
I think it resonated. It resonated a bit when I got into Bitcoin in 2013.
Perfect. My name is Itai. I'm with Market Across. We are a marketing and PR agency and handle a lot of the stuff for this event. Perfect. Thank you for joining us. Important disclaimer, we have people from a lot of different regulated and different entities. We're not going to be talking about anything price-oriented. Please don't see anything as investment. We're just talking about investment advice. We're talking about larger narratives and themes. So it's no secret. We saw all-time highs in interests, and people are interested again. Do you think that there's anything fundamentally different this time around? If it's on the tech level, if it's maybe on who's more interested right now, is it more institutionals? Are they the ones that liked it and stayed in? But what's different this time around on the fundamental level that you think is pushing maybe then prices? But again, we're talking more about fundamentals, not about the prices themselves. Price for me is a vector of interest. That's it.
Okay. I'm going to start.
Go for it.
So I see two main fundamentals. One is that the last crypto winter has cleaned the house. And also we've got greater regulatory clarity. And I think that's helping on consumer protection, and also that leads to consumers feel more comfortable or more confident on what we have right now.
Yeah, we see the first crypto founder, Sam Bankman-Fried, getting 25 years in federal prison in the United States. That's also shows that people, if someone does something wrong, he gets reprimanded.
And that could avoid at a certain level some of the mismanagement that we've seen that has led to the scandals that we've seen in the past. That's one thing. Also, we see that even with the crypto winter, institutional investors, their perception on digital assets has increased. It's better. They are adopting digital assets, and there's recent surveys that 70% approximately of institutional investors are investing on them.
Thank you. What do you think?
I can go more. I go.
Yeah.
The way, at least at a personal level, more than a professional level, it's all about narrative and cycles. I think that 2018, 2019 was about ICO, 2020, 2021 was DeFi and NFT, Web3. This cycle, it continues evolving, so you have three main themes that I see. So modularity, we've seen it, I'm gonna give some names, but again, this is just for example. So modularity, you have Celestia, you have Dimension, you have all those trends with roll-up as a service, all those even approach with subnets, subchain, the dedicated apps on a dedicated chain, if I make it simple.
I think you're saying names that we all know here.
Yeah.
I'm pretty sure that 0.01% of people that hold digital assets are aware of roll-up, scalability, Cosmos, whatever. So, yeah.
So that's why I will stay with themes. The second theme is interoperability. So it's all about bridging blockchain, so either public to public or private to public, permission to public. Here you have Chainlink, CCIP, so I think this is quite, there is some demand and some fundamentals that we see because they are working with Swift, with different actors and institutions. You have also Interbridge, so you have narrative number 2. Number 3, and probably the biggest one, and that's what is changing because we are moving into real production. It's about scalability. And here on scalability, you have all the Ethereum layer 2 that we know. You have a new space, and then probably I will let Dominique elaborate on Bitcoin layer 2, because today also there is this new ecosystem that is currently being created. You have different also approach because they want to, so this scalability will be a big theme. And that's what is changing because instead of just doing a one-time tokenization of assets, because when I do a POC, a proof of concept, to tokenize, I don't know, debt. If you want to industrialize, you need the tech to be cost efficient, you need the tech to be fast, you need the tech to actually work and avoid having really those pain points. So I think this is kind of what's changing, and that's why you see today more and more institutions that are ready to adopt institutions from a technology level.
Perfect. Do you have anything to add, Dominic, or should we move on?
Sure. And so what's different this time around? I think there's a lot similar, actually. I mean, the markets are still driven by memes and narratives.
I was going to say dog with hat or whatever. You know?
Yeah, there's still a lot of memes and narratives. And, people oftentimes are buying into narratives. And hopefully, that's tempered a bit. And we'll have a bit more technology this time. That's what we're hoping for. I think this time around, we may see the emergence of an understanding of third-generation blockchain. And so first-generation blockchain was really defined by Bitcoin, and it's a blockchain that just hosts a cryptocurrency ledger, right? And, there were competitors in that first lane, like Litecoin, and many that have disappeared, like Feathercoin. The second lane was traditional blockchain with some smart contracts, and that was, pioneered by Ethereum. And now there are many competitors in that lane. You've got Avalanche, Solana, Near, Aptos Sui, and in some ways, layer 2s that are just stamping computation on those traditional blockchains because they don't scale, but they do host smart contracts. And then the third generation is a blockchain that plays the role of cloud, where, you know, the
Block space, you know. It kind of more of block spaces. It's not just about like the.
Well, I'm you know, talking about blockchain where you can build anything with smart contracts and you get full stack decentralization. So in the second lane, where you've got traditional blockchains that host smart contracts, you know, people say it's built on blockchain XYZ. What they really mean is it's built on Amazon Web Services, and at key moments when you're using that service, you're bumped out to use a wallet like MetaMask, right? But the service isn't really built on the blockchain. It's built on Amazon Web Services, and the blockchain is just holding a bit of DeFi logic and some tokens. Third generation blockchain, there's no traditional IT, there's no cloud. The blockchain is really doing everything. It's, you know, I mean, so with traditional blockchain, you can't even store a phone photo. That's a fact that surprises a lot of people. You can't upload a single phone photo to the blockchains that build themselves as perhaps the most scalable in the space. So third generation blockchain, you can actually build and run a social network entirely from the blockchain. You can build and run a DEX that looks like an order book exchange, or is an order book exchange, from the chain. And you can put these kind of things directly under the control of DAOs, so internet communities get full ownership and full control, and you have full
So we're going to get that in a second of, I would say, the decentralized versus centralized paths. So we're sitting in Europe. I think Mika, which was released, I think last year fully, whatever, or 2 years ago, shows what seems to be the most robust potential framework for digital assets adoption and innovation. What do you think about that? Do you think that Mika is a transformative moment, or is it just the first of many? What are your thoughts? Especially as America seems to be really historic, the past 2 years, cramming down immensely on usage, innovation, anything.
I believe Mika is a positive step in the right direction. And going back to the former question, I believe there are two things. And one is about regulation. It gives a positive narrative because there's a lot of people, they were afraid to go into crypto exposure because of the obvious negative conversations that happened. So Mika gives a common ground. It gives a certain framework in terms of what regulations and protection, consumer protection requirements need to be in place, and also forces more transparency in the ground. However, if you look about NFTs, the DeFi space, that's all not incorporated, and the market is much faster in innovation than regulation can be. And if you think about it, the European Parliament started to recognize, to deal with this in 2020, and it took 4 years to come with a regulatory framework that is relatively basic, but again, moves in the right direction. So it's positive.
I do agree. I think that it's a historical moment. It's the first regulatory framework in a major jurisdiction, and I think that it's going to serve as an inspiration for other jurisdictions, let's say, to copy-paste and improve what Mika has done. And obviously, there are some things that are missing, but as a first step, I think we are on the right direction. And also, I think that it's good for the European Union because it could be a potential hub for crypto companies. I think it can attract companies to set their businesses here, as regulatory clarity is always very, very helpful.
What I can add is that we wait for Mika, but there are already some framework in some jurisdictions that are already ready. So I'm gonna give you a couple of examples. So Switzerland, you have the Swiss Lex DLT, so distributed ledger technology since February 2021 that recognizes ledger-based securities. So you can actually, basically, when you tokenize a share or whatever the underlying instrument, is like having a traditional asset. So you have the same economic and social rights. That would be one. You have in Germany the EWPG Act, so electronic securities, in 2023 to tokenize bearer bonds. So we saw some German banks actually stepping into tokenization. And then, last but not least, you have Luxembourg also.
I agree, Victor. That's why I was saying major jurisdiction, because the beauty of Mika is that it's for all the EU, and you get a Mika license in one country and you passport to the others.
Exactly.
I think we all want to be in a situation where most of the companies can be incorporated in the same place where most of their employees actually live.
Exactly.
Like this whole kind of, as the accountant of my company says, you guys can go to the British Virgin Islands as much as you want. You have so many clients from there. I just never met anyone from British Virgin Islands. So yeah, I think that we all want to be in a place where we can, set up shop where we all are. Dominic, do you have anything to add before we move on? Or
Nothing too much to add. I mean, I agree with what's being said. One thing I saw on Twitter, I don't know if this is true.
It's on the internet. It has to be true.
Yeah. I think this was from this guy, Rune, who's one of the Make or Die guys. And he said that, exchanges like Uniswap may have to add KYC under MiCA because these smart contracts are decentralized and on the blockchain. The actual code that does the swaps, manages the liquidity pool, that's on the blockchain. But the user experience you interact with is actually on Amazon Web Services or some other, centralized traditional IT. So that's going to be an interesting one. I think from our perspective, it's a good one because it will force people to pursue full stack decentralization, where you don't just decentralize the DeFi bit, but you also decentralize, the user experience and things like that.
Perfect. So actually, it's a great segue to my next question. I don't know if everyone can respond about that, but do users actually care about regulated products? Again, DeFi, a lot of DeFi, FTX, I know it regulated in some places. You had the Celsiuses historically. I understand that institutions want that, and we talk about that, but again, Binance, the biggest exchange in the world, full disclosure, also one of my clients, for years had a lot of issues around that as well. So do end crypto users care that much about regulation, or do they think that they can make their own research and their own decisions?
I think definitely they care. Because you need to have protection. So far, we have seen so many fraudulent activities, and we talk about the next wave adoption, right? We don't talk about the crypto kids, right? We talk about people that really believe in that as an asset allocation, as a risk diversification. US regulation is very difficult, right? And the ETF approval that was basically forced by BlackRock, nobody else could have done it. There are 27 regulatory bodies in the US, they basically also disagree with each other, had a significant impact because now digital assets, or crypto, let's put it this way, is now official part of the strategic asset allocation. So every asset manager in the world or bank will come up with an offering in that regard. And for those people, the next wave regulation is very important. Having said that, DeFi proposition needs to evolve. And I guess when we talk about Uniswap, the next evolution is maybe something that it integrates with digital ID, that you actually can figure out who's on the other side of the deal. And that's also true for payments, which I believe is a huge significant potential. Cross-border instant payment, P2P, with circumventing the traditional infrastructure SWIFT, that's going to be the next super move where the blockchain technology and crypto with all its flavors and benefits will become mainstream over the next 5 years.
From a regulator point of view, what matters usually is to find, in case if something goes wrong, who is responsible. So in the pure decentralized world, no one is responsible. So that's kind of the issue. Okay, so that's ultimately what the regulator wants is.
You guys all gave very good answers. None of them are what I actually asked, which is end users. The end user, do they care? And I actually think that most of them, it's a feature, not a bug for them. They didn't join this sector or segment to play by these rules. So the question is, and again, institution, next wave, I get that, but the end user is there's more liquidity on more DEXs than you're gonna have on Gemini. Maybe not forever, but right now. And Gemini, so the question is, I understand we all want that, but the end users don't seem to care that much.
It will depend on
I'm
typology.
sorry, you can't talk, I know.
I was going to say that you've got all flavors of users. So
Exactly, it depends on the users.
Depends.
Is it professional investors? Is
Yeah,
it
it depends
retail?
on the type of investor, and I'm sure that some people that are not tech savvy that loved DeFi suffered a hack or something like that, and now they are missing that protection.
For sure.
So it depends.
So let's actually segue into that. And I know there's also we're talking about this is institutional DeFi. Now we're seeing a lot of financial organizations, banks as well, creating their closed gardens. They want to offer the different types of products that digital assets have, if it's staking, if it's swapping, if it's exposure to different types of assets, but they want to do it in their own closed gardens with their own custodianship or whatever. Is that a big trend? What are the maybe issues there? You know, do all these institutions, are they have no problem with not holding custody of their money? And isn't crypto that I don't hold not exactly crypto? So again, sorry, I'm a bit
I
more.
think that it's worth clarifying that depends on what you interpret by institutional DeFi. So what I interpret,
Educate me.
what I think is that you can leverage the benefits of DeFi protocols, automatization, innovation, etc., on the financial institutions industry with the safeguards that we apply to the rest of the products. I mean, that means take the smart contracts and use it in a controlled environment with know your customer, anti-money laundering, consumer protection, cybersecurity checks, etc., etc., etc. And I mean, we can provide new products to our customers based on that tech. That doesn't mean taking what we've got already out there and putting AML controls to it. It's just taking that technology inside the financial system. You know what I...
Yeah, of course, of course.
I mean...
What are your thoughts? Is that going to be... Are banks going to replace centralized exchanges, or like that's what's going to happen? What are you guys' thoughts?
I mean, you know, being a blockchain guy, I hope that, you know, DEXs kind of prevail in the end. That's what I'd like to see.
Same here. And the DEX is, I mean, we talk about the crypto, right? But the next one is the security tokens. And in order, there are already a couple of
You
platforms.
use the not cool term. So security tokens are out. Real world assets. That's cool.
Real world assets.
What's the difference?
Real
I don't
world
know.
assets. I don't know, right? I'm not a lawyer.
Yeah.
There is a delineation can be made, but all these platforms that already exist. I mean, Taurus has one, for instance. They all suffer from liquidity, right? And it has really this decentralization allows to have a greater reach for a specific product on a global perspective, that liquidity can be created. And that's the big, significant, positive impact that the crypto exchanges had. It's very easy to set up accounts.
Yeah, it's agility. So it's agility versus stability.
Exactly.
Can our industry, and again, banks need to have stability. That's why we want them. Can crypto move to a stability stage and lose agility, or will it lose its X factor?
I believe it needs to have both. Okay. It needs to be agile and stable, agility and stability at the same time. It's a prerequisite.
For the end user, ultimately, what matters is just convenience. And obviously, you don't want to think that everything can be hacked or lost at any point in time, like we've seen a couple of times in the past. So, but after, from a bank point of view,
maybe a bigger discussion, but banks can go bankrupt 100% and all your money is gone. So yeah, there's a crypto hack and then there's a bank default, and it can happen. It has happened. There's a whole issue with crypto and custody. And again, call me old-fashioned, but we really wanted to hold our own funds. So I understand, like, institutions want to make us afraid that someone might steal our money, but bankers have also stole a bunch of money.
Deposit guarantees. There's insurance on part of your money, right? Yeah. But maybe I didn't clarify it properly. But when I say using DeFi protocols, could be that you and me are clients of the same bank, and you can lend me money, not the bank. I mean you, and the bank just guarantees that you are who you are. I'm who I am.
There's so P2P financial tools in general.
Yeah, that's right.
Again, the goal is always when something is going wrong, something goes wrong, who is responsible? Who can protect user A from user B in case? So that's
there's a dispute.
Mindset. Exactly.
Yeah, I'm not sure that users care about responsibility. They care about making money or whatever. Responsibility is what happens when it fails. But usually users interact with a product because they want it to succeed. But, you know.
I mean, the crypto way to think about it is that intermediaries have to be removed, right? So What Satoshi taught us is that if you have an intermediary in a system, then that intermediary can fail or become malicious. And so the whole idea behind Bitcoin was that you would hold your currency yourself, hold your money yourself, albeit it's more like digital gold actually, and nobody could take it off you, and nobody could stop you transferring it to somebody else. So if you extend that thinking about removing intermediaries, then you realize that in the long run, DeFi has to introduce protection mechanisms that enable intermediaries to be removed. Because it's only without an intermediary that you can be sure that some action can be taken. If there's an intermediary, they have the power to deny the action, or perhaps become malicious and take your money or make you lose money. And banks ultimately are a kind of intermediary because you're dependent on them for the correct functioning of whatever they maintain for you. And that's really the whole purpose of blockchain. Remove intermediaries, whether it's removing intermediaries from currency transactions as per Bitcoin, or removing intermediaries from compute on something like the internet computer.
I think also another question, again, it's a bit of a surprise when everyone is ready and can answer it, but there's a question of also fractional reserves with these institutions. So let's say banks, no one in specific, banks, ETFs or whatever, a lot of their business model is not exactly holding 100% of what users are claimed are supposed to have. Can there be a situation that all the banks in the world are going to get into crypto, and then the amount of people that look into their GUI and think that they have Bitcoin is not connected to maybe the amount of Bitcoins, quote unquote, in the world or what the banks hold? Is that a situation that could potentially happen if all the banks get into crypto?
I mean that would be truly horrible. I don't think they can do that. I think
again, hypothetical situation.
Yeah, if you use a service like Coinbase Prime, then you can see where your crypto is stored, and I think that's the kind of approach that custodial services should take. So that'll make it impossible for fractional reserve to be created over base assets like Bitcoin, because that would be horrible. But I would say that crypto itself has its own version of fractional reserve. If you look at the way things like ETH are staked and restaked, and there's this hypothecation and rehypothecation, and so
that's a whole different subject. We hate inflation
not,
and loans, but restaking, that's cool right now.
exactly. So crypto is not entirely free of that kind of thing either.
All right, silence from the
No. So on fractionalization, the way you can look at it ultimately. So again, to put the different options are the following. So either it's full collateralization 1-for-1, or you have algorithmic pegging. We've seen usually to maintain a stable coin. You've seen it. Usually it can fail. Yeah. Which is really stabilization. Well, it's what you call reserve, mechanism of stabilization. Okay. So you have those two, the second item, and the third item is partial collateralization, which is actually this fractionalization.
Yes.
Exactly. Honestly, the reality is that today, when you look at just the financial market, and just taking a simple example for the crypto, you have spots. You have the spot market and the derivative market.
Yep.
So far, as the crypto market evolves, you see more and more restaking, derivative, product on product, which is
synthetics, wraps. Yeah, exactly.
Which is kind of can represent ultimately a potential risk. So even you have with Ethena USDE recently. Yeah. So you were a bit criticizing or basically. The traditional finance, but for the crypto world also, you have those limitations.
Oh, of course. We know it's a wild, wild west. The question is, when the wild west meets institutions, how do we try and enjoy the best of both worlds? But I do think that it's clear to everyone that crypto is not here to replace banking. It is here to maybe improve banking a bit, but how do we kind of do that together? All right, cool. So we're getting to the kind of last few minutes of what we're gonna do. Really interested to hear more about what you guys think, specifically the true value that institutional and financial and regulation is going to bring to the entire ecosystem. Of course, liquidity, investors, ETFs, that's great. But I think maybe touching on what you want to say, like how, so I think we all understand what are some of like friction points, custody, intermediaries, but what are the things that you really think that us as an industry can really improve? I can tell you personally, we as the agency, do not accept anonymous projects as clients. That's just something that we said. I'm sorry, in the natural world, there's no such thing as founders or whatever that don't exist. I can't pitch you to whatever, like if you're a meme or something. Of course, all these founders always say the same thing. Satoshi was anonymous. Yeah, you're not Satoshi. So from my question to you, working with a lot of blockchain and crypto projects, what do you think are the key fundamentals that need to be better improved? Is it maybe the projects themselves need better treasury management or banking? Maybe the users, maybe entering KYC on the basic layer. But what can the blockchain industry do better to make itself ready for better institutional, I would say, adoption? Dominic, run.
All right. Look, I think transparency is actually the thing. And, well-functioning markets depend upon good information. If you take away the information, markets can't function properly and they don't properly allocate capital. And I think, there's still a lot of capital misallocation in blockchain generally. And it derives from a lack of transparency, and it derives from the poor quality of the signal that comes through social media, the crypto press. And that's why we need regulation. We don't need, in my view, regulators trying to prove that native blockchain tokens are securities. In my view, that's a waste of time. The real issue is, are people being given good information? And today, a lot of people that invest in blockchain assets cannot tell the difference between a website describing some fantasy technology that might be developed in 10 years' time and projects with hundreds of computer science researchers and engineers. They just cannot tell the difference. They don't even understand that it's important to look at a team page. And the problem is that there's no consequence for false advertising. And so the market has learned that what you do is you promote memes and narratives. And that's because that's what people invest in. And it's a kind of self-fulfilling prophecy, because now people realize that, well, it's the best memes and narratives that go up, so I'm just going to invest in the memes and narratives, rather than trying to invest in fundamental technology.
Are we talking about GameStop or stocks or crypto?
I'm talking about crypto, actually.
Oh, okay.
I mean, you'll see projects popping up all the time. I mean, I'll give you an example. On the internet computer, it's like 1,000+ years of R&D that's created that network. And recently, I demonstrated smart contracts running AI models. We demonstrated an image classification neural network running as a smart contract. And immediately, there was this sort of flurry of activity from blockchains that can't even store a photograph, with people talking about AI on the blockchain. And you've got all these blockchains, the AI, the blockchain for AI, the token for AI, and that kind of thing. And if you really did a survey of the public that invests in blockchain, I'll guarantee you that most of them are very confused, and they have no idea of the difference between a blockchain that's actually running AI models on the chain as smart contracts, and some of these projects just making a whole load of noise about being the blockchain for AI or the token for AI. And that's a problem, because you take away the signal.
So platforming and education of users in a better fashion and again, you don't want middlemen, but there's also an importance of a financial institution as a middleman doing some of that DD for us and saying, hey guys, we're not.
It could help. Yeah, that's where it could help. Look, I think if institutions come in and they demand, or they create consequences for false advertising, for example, like if an institution invests in something that claims to be doing AI on the blockchain and it's not, well, maybe then eventually, people will stop, overhyping their projects and misleading people. So I think institutions can play an important role, bringing some kind of order to the markets and pushing people to be a bit more truthful. And that will have a very healthy effect, because it'll move the business model from being one that's primarily about promoting narratives to one where it's primarily about implementing narratives, right? And making
or delivering products.
Delivering, yeah, exactly. Another way of putting it, delivering technology and delivering.
Only my crypto clients have an announcement schedule before they have a product roadmap, but yes. Thoughts?
I may sound a little bit boring, but again, on the regulatory side, the research element, that's what you're talking about. If you look at the traditional finance, you have buy-side research, sell-side research, because obviously promoting, you can have a lot
Precisely,
of
yeah.
conflict of interest, and that's many times it's the case. The second point is the tokenization projects, and particularly when we talk about real-world asset. Everybody is very excited when they present their project about the origination phase of things. We're going to issue this and that for that and this purpose. But they haven't thought about the liquidity, the exit. So you can have tokenization of cars, tokenization of lands, tokenization of real estates, but they haven't gone anywhere the last 5-6 years because you cannot sell it.
The entire tokenized real estate market is smaller than the value of one tier 1 building in Manhattan. So that's the entire market.
Exactly. So that's the thinking is the blockchain, or the crypto community or the blockchain community should think about what can I promote in order to create liquidity at the DEX or the centralized exchange. And many times it starts at the fundamental that the smart contract does not have all the attributes incorporated, then somebody can do a third-party evaluation of the value of that asset. And the second point is the fantastic about crypto exchange, everybody can directly go, you know, from the retail to the institutional to the wealth client. And that's something for the next evolution for the real world assets or the security tokens that everybody has an access. And you don't have to go through this intermediary like banks. And as Scotty said before, it's a great combination because banks may be going to be more like a State Street.
I don't think people can trade securities without KYC.
Yeah, that's clear, yeah.
Okay. Any more thoughts before we wrap it up? No? All right. Thank you very much. I know it's kind of a complex subject, regulation, banks, crypto. We have protocols here, we have banks here. So thank you very much for all my guests. They're going to stick around for a few minutes here. So if anyone has any questions, please feel free. And yes, thank you very much for joining us. And merci.
You just bring the mics out.
Thank you.
Thank you, Ty.
Hope I didn't.
The best